You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options House, a powerful, easy-to-use, and intuitive online trading platform that's not only fast and reliable, but comes with dedicated customer service and a great trading experience. Trade on the platform that's top-rated by Barron's and Stockbrokers.com. With completely transparent, value-oriented pricing, Options House is your all-in-one solution for options, futures, and stock trading. Plus, open and fund a new account at optionshouse.com/insider today and trade commission-free for 60 days. Options House is a member of FINRA, SIPC, and NFA. And now, get ready to hit the Option Block.
All right, everybody, that rockin' tune means it's time once again for the Option Block, a little program we like to call around here our own personal favorite bi-weekly source. Hopefully it's yours, true, as well. Bi-weekly source for all things options related, a little bit of options unusual activity, some breaking news and analysis and developments from the world of options, some strategy, answer some of your mail, throw it all together, stir it all up with some peering into the future in the Around the Block segment. And you have the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. We've got, about 15 programs for you guys to sink your teeth into now. So if you're saying to yourself, there's just not enough options content in iTunes or TuneIn or wherever I get my podcasts or via the App Store, well, you're just not looking hard enough. We got quite a few, including our daily news show, the Options News Rundown, then, of course, 500-plus archived episodes of this here fine program, the Option Block, as well as the other 14 programs on the network. The easiest place to find all of that, theoptionsinsider.com, the mothership, we like to call it, the flagship. Remember, you can go to all the other places too, iTunes, TuneIn, Stitcher. A lot of you guys like to get it there. But remember, they usually focus on the most recent. They'll usually cap the episodes, maybe the most recent 50 in the archives. So you want to get the full kit and caboodle, the app, via iTunes or Google Play, or indeed via the website. The two easiest places to do just that. And, of course, I always forget to mention at the top of the show, we are, of course, streaming live via Mixlr. If you guys would like to join us as well, MIXLR is how you find it. You can follow us, of course, there in the old Twitter, at Options. We tweet it out there via Facebook. Or, of course, just sign up for Mixlr, and you can follow us there and be instantly notified the second we go live. And joining me on the old program today, let's go out. I'm not sure where you guys are today, so I'm going to guess which one's closest. Let's start in order of the realm of the pit, where we are joined by the Greasy Meatball himself, Mr. Mark Sebastian. Hasn't been on Option Block in a while. Mr. Greasy Meatball, welcome back to the Option Block program, sir.
Good to be here. Excited to be here. Happy to be here. And you're right, I am super close to you. I almost walked over to do the show.
You've been hanging out here with Steve, then, our other guest. Where are you beaming in from?
Our headquarters on LaSalle and Adams.
And since I mentioned Steve, we are also joined in studio. Always nice to have an in-person studio with me. Otherwise, it's just me talking to myself here in the studio, Steve, and it gets a little sound like a crazy person after a while. We are joined once again by Steve Clausen, the Chief Investment Strategist over there at Options House. Steve, how are things going? I'm guessing this week perhaps a little bit more settled than last week.
Yeah, we're hoping so. It's been going great, and it's great to be in the studio. I didn't know you got so dressed up for these shows.
Yes,
Mark.
we're very fancy. We're very fancy here. I actually have a collared shirt. That's about it, though. The rest of it, it's like a news broadcast. Below the waist, it's all Speedos. Don't look, Steve. Don't look. It's very alarming. All right, we are also joined, last but not least, by the man beaming in from good old scenic and lovely, the paradise, the Mecca, known as St. Charles, Illinois, Mr. Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, to you as well.
Always happy to be here, and I don't even have to wear pants in my studio.
Well, we're just conjuring up all sorts of images in our heads right now. So rather than keep conjuring those up, let's just keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, that music means it's time for the Trading Block, the portion of the program where we break down what was moving, what was shaking, what was lighting it up in today's broad market, as well as option-centric activity. A bit of a mixed day on the old street. S&P closing slightly off on the day, fractionally off a percentage point on the day. Tech-heavy NASDAQ up about half a percentage point. The Dow also slightly off, but not the crazy moves we've seen in recent weeks. Overall, about a 12 or so handle range out there in S&P. Not nothing, but certainly not the tumultuous days of yore we've seen not that long ago. Of course, our old friend VIX Cash still hovering south of the 13 handle, right about 1270 or so as we are recording this and streaming it live here on Monday, August 1st. Crazy to believe it's August already. I can't really wrap my head around that yet, but we'll get into that maybe a little bit later here in the program. We'll get into some of the other activity lighting it up today. Of course, a lot of the market taken on the chin earlier today and still kind of closing off as a result of oil. Oil, of course, passing that oh-so-magical, oh-so-important theoretical and practical level of the 40 handle. We've been watching on Volatility Views and indeed on our This Week in Futures Options program. A lot of activity, a lot of options lining up around that 40 handle and south, and certainly bidding up the put wing out there, particularly in the big WTI options, but also in places like USO and others. And of course, all that concern, all that volatility premium apparently warranted because crude once again down on the day, and that's weighing on a lot of factors out there. Steve, you get pride of place here because you're in the studio, so you get to go first today. Tell us what's on your mind, and maybe let's start there. Maybe let's start in the realm of crude. I know you guys over there at Options House just launching your FCM, so you're kind of really getting into the full fun of all things futures and indeed options on futures. Anything catching your eye out there with the OH clientele right now in the realm of maybe have they also been piling into the 40 handle and south puts in WTI? Have you seen something else, or what was catching your eye out there in today's activity, Steve?
Yeah, I think this was a really important day because end of last week, I was saying I was going to look at the Chevron, ExxonMobil, the titans of the oil industry, the companies declared earnings. They came out with tough earnings. The markets immediately sold off, but by the end of the day, Friday, they actually came back. Today, though, was the death knell. These stocks were down greater than 3.5%, along with crude dropping below that psychologically important 40 handle, right? So I think that this is sort of spells out why it's so important to have all these asset classes, to be able to trade futures, to be able to trade the crude oil itself, to be in the first level of what drives these stock prices. But having ability to trade crude oil futures as well as these individual stocks that are dependent upon crude is critically important. Being able to round out the portfolio. If you like ExxonMobil, if you like Chevron, but you're a little bit nervous about the short-term outlook for crude itself, for the product that they make, the product they sell. And it seems like it was a supply side issue that is causing crude oil to go down. These companies are just too darn good at supplying crude oil to the globe, to the world. And there's not enough demand right now for it. But it seems like it's a supply side issue on the crude oil price. These companies may still be fine companies, so you can hedge your exposure or their exposure to crude oil directly using those crude oil futures.
Yeah, it's been interesting to watch, and I know we've seen a lot of brokers in the space really scramble and move to accommodate that over the last few years. 5 or so years ago, certainly when we launched the Options Insider and the network back almost 10 years ago. So in the dark ages, Steve, of all things online from an options perspective, and certainly from a podcast perspective, we literally were the first in that side of the space. Yeah, and the notion of having a broker that could go out there and trying to, to cross that divide, that Mason-Dixon line between the equities on one side and the futures and futures options on the other side. It was always such a huge gulf. We saw a lot of products kind of die and wither on the vine because they required maybe a client to open up a futures account, and they just weren't ready to take that extra step, and it was a huge pain. And fast forward now, here we are, 2016, and that process is getting much more streamlined. And brokers like you guys and a lot of others out there have really tried to make that process a lot easier. And hopefully that for a lot of our listeners, I know for us, just anecdotally seeing all of the metrics we get in just from the questions and the email and what people are downloading, the shows they're responding to, we've never seen this much interest across the broad spectrum of all commodities. Could be crude, could be gold, could be pretty much you pick your poison. And that's clearly a reflection of a lot of the macro news they're seeing out there, the big news in gold, and probably also of the more ready availability of tools like you're talking about to really access the crude market.
Yeah, it's important to realize, though, that based on regulations, in order to trade futures, you do still have to have a futures account. But firms like ours have made it very streamlined, as you mentioned, to be able to have both the futures account and the securities account displayed with the same tools, the same ability to look at them, seamlessly, basically back and forth, have the same amount of trading capital to be available to both products. And that's what's really has been the advantage now in the 2016 versus having to have your futures account at a futures only clearing firm and your options account and your securities account at a securities broker.
Yeah, the clearing side has also advanced quite a bit, and that's certainly progressed a lot of what we're talking about here today. And hopefully, going forward down the road, that demarcation will eventually erode, and we can talk about these products interchangeably, and people can trade them as interchangeably as we sling them here on the old program. Let's turn our attention. Let's go in order of proximity. Mark, you said you were closest, so you're next up. What caught your eye in today's activity, sir?
I would say Apple. I hate to say it, but Apple is, after volatility hitting near historic levels over the last couple of years, Apple took off. We saw something similar in Facebook today. Facebook vol is well below any level it's touched in the last 2 years. Apple was at that level on Friday. Today, what do you see? All of these. This is the danger of overwriting. Listen, I'm all in favor of covered call trading. All right, I am. But when everybody in the world unloads Apple 105 August and September calls and Apple 110 August and September calls, and then Apple blows through the 105 strike, vol's going to pop and Apple's going to pop at the same time. We started to see that today. We're just starting to see the inklings of that. And I think you're going to see more of that. There is massive open interest at the September 105s and 110s. There's huge open interest at the August 105s and 110s. And as Apple rallies, there's going to be a mad rush to cover those. And I think it's going to pop. Facebook, I think you're about to see something very similar. There's big open interest in August at the 125 and 130 strike. Obviously not like Apple. It doesn't do the same volume. But big open interest there and big open interest in September at the 125, 130, and 135 strike. So as Facebook starts to rally, I think there's a strong chance that this volatility that's just being absolutely pummeled could cause the market to catch a serious bid and move somewhat higher in relatively short order. And I think that's kind of the big things that caught my eye, along with the nice pop in oil vol and the market trying to sell off before doing nothing.
Yeah, all those people who were calling Apple dead money pre-earnings and saying, revising their price targets down to, I believe, the mid 80 handle and stuff like that are all maybe ruining it a little bit now. There's a lot of action, I know, in the downside puts. I don't know, Uncle Mike, you're our resident Apple devotee here. Maybe former, maybe not as much as you used to be, but still a resident Apple guy here on the old program. First off, here we are almost a week or so post Apple earnings. What are your thoughts on Apple? Well north of the century mark here, 106, and also what Mark was alluding to there about blowing through strikes willy-nilly. You weren't writing 105s, were you?
No, I think I might have like a couple of collars in there, some longer-term things that might have gone through, but I'm just going to let it get called away if that's the case. But No, I agree with Mark 100% on the option side of it, and that with the open interest, the way he described it. In terms of Apple popping, we're going to have, I think, I'm seeing Apple going up, and this is just based on looking at the charts, seeing where some resistance is. I could see Apple going up a couple more dollars. Not sure what level you have Apple going to, Mark, but I could see it going up to maybe around the 110 level. I don't see it touching.
I'm looking at like 112.
Okay, got it. We're $2 off then. There we go. So,
yeah, we're there.
Got it.
Oh, sorry, keep talking.
No, go ahead.
Well, Mike, because there's so much short call selling at the 110 level, if a bunch of people do decide they don't want to lose their stock, that could cause a serious pop in the underlying and or in implied volatility as it moves higher. We kind of see the reverse action. Normally you expect vol to come in. If Apple really starts to threaten these heavy short strikes, you never know what could happen. You never know.
Oh, you don't. So you believe actually that the option could possibly drive the stock. It's that much open interest.
Yeah, it's like 100,000. that's not a small amount.
No, it is
not. It's
10
million shares.
No, it is not. Agreed on that. So, yeah, I guess with that, Apple did have a surprise. I will be the first to admit the move after the earnings did surprise me, being the former Apple zealot with which I am. But nonetheless, it is what it is. The other thing to watch with oil right now, to kind of add to a little bit of what we were talking about there, we're probably at, if you look at a chart of oil, we're at close to a 50% retracement from the lows in early February. We're not quite there yet. So if you do believe in that sort of thing, then it might be an opportunity to get into oil. If you are looking to get into oil, I would definitely recommend having a longer term outlook on it, just because in the short term, it's very much anything can happen. So in terms of what I'm seeing on the marketplace today, oil, obviously the biggest story of the day. XLE is down over 3%. That's no doubt that's the major drag on the marketplace. Financials are relatively flat on the day. I believe XLF was down a couple of pennies. But for the most part, oil is without a doubt the big story. The other thing that I thought was interesting is that TLT bonds came down quite a bit today with TLT. Well, not quite a bit, but bonds had a down day today. And with that, the drop in oil, I think, is what prevented stocks from coming up in general, and also the fact that bonds are coming down a little bit. So keep your eye on that one too, folks.
Steve and I were just chatting here, a little behind-the-scenes chat on the show while you guys were holding court on the show.
That can happen in the studio.
Yes, that happens when you're in the studio and you've had a few beverages and everyone's having fun and you're trying on different options insider gear and just having a good old party in here in the studio. But we were talking about that exact same thing, Steve, where you were saying a lot of OH clientele, like a lot of brokers clientele, have Apple from lower cost bases, and so they may be a little bit, shall we say, unwilling to have that stock called away. Even at these relatively lofty levels, they're not going to give it up, or they don't want to have the tax implications of giving it up, so they're going to be scrambling to roll, kind of what Mark was alluding to earlier.
Yeah, exactly. These folks have been in Apple forever. They bought it when their kids were born. They're going to sell it when their kids leave the nest. They do not want to have this stock called away from them. And, a covered call strategy is great. And you keep riding it. And then Apple was, a slow mover for a while. And all of a sudden, it's taken a move to the upside. I could definitely see these folks having to buy these shorter term options as they become close to being in the money, right? The delta goes from being a 25 delta when they sold it to now being a 40 delta, 50 delta. They're losing their exposure to upside movements in Apple. They have to buy these things back, roll them back to a higher strike. I could definitely see a pop in short-term, the short-term options that are threatening to become, exercisable.
Exercisable, I like that. We should invoke that on the show a lot more often here. But meanwhile, since we're talking rolls and all sorts of fun stuff, that's kind of a bit of our theme, or at least our kickoff here for the Odd Block. So without further ado, let's head on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. that funky tune means this is the portion of the show where we dive on into some of the weirder, the wilder, the more interesting, and perhaps head-scratching paper that is lighting up in the old options market today. Going to kick things off in a name. I don't think we've talked about this one in quite some time. Not usually the most sexy or exciting of names, so it usually doesn't catch our eye here on the odd block, except for today. This is MetLife Inc., ticker symbol MET, closing today at about 42.5 or so off, about 20 odd cents. Not the biggest day out there in MetLife. So there certainly wasn't underlying movement that caught our eye. This is a name that does about 11,000 and change a day, doing nearly 30,000 contracts a day, about 11 to 1 calls over puts, and that's pretty much going to give you some inkling, listeners, of where our eye was drawn today. In particular, it looks like a bit of a sizable call roll. It was the AUG 40 roll / spread going up. When we started looking at it this morning, we saw about nearly 11,000. That seems to be the lion's share of the volume of this spread going up. Paper selling October 40s, buying the AUG 40s, again, doing that close to 11,000 times. Net, they're selling the spread out for 63 cents. Open interest on the AUG 40 is about 12,000 and change. Open interest on the AUG 40 is substantially less, a whopping 5. That's how we get the whopping inclination. This could perhaps indeed be a bit of a roll, and it could be someone, again, looking to get themselves a little bit more time on the old chart, looking back at the year that was out here in Met, and that 40 handle has been an interesting one, slightly active. It's kind of it's raised its ugly head a few times over the past year. This name has vacillated around quite a bit, as low as about in the mid 30s. Not that long ago, just about a month ago or so, it was trading in that mid 30 or so range and having had a decent rally there, settling out, like I said, right around 42.55. So interesting strike selection on these that they would continue to. Steve, I see your ears perking up on these, and maybe we'll start with you. Interesting that they would continue that they would continue these going off, and they would keep it at the same strike. Usually something like this, the underlying burst through the strikes. Usually they see they take the opportunity to go up and out. They really didn't do that here, so obviously they're not scared of getting called away at the 40 strike, or they're a little bit more pessimistic on the future potential of MetLife. What's your take here, Steve, on these? This call roll here in Met?
Yeah, definitely with the size here, it's an institutional. You would assume it's an institutional customer who was short these 40 calls. Like you said, the stock was in the 30 handle, and so the 40 calls would be an ideal override candidate, especially for an insurance company. Kind of boring, right? The stock actually spikes a little bit higher, gets through. Now it's a threat to be exercised. Why cover these now? Why roll them now when they're August expiration? Two reasons, right? Earnings are the 3rd of August this week, but more importantly, they go ex-dividend on the 4th of August of this week. So that's Thursday, I believe, right? And when these things go ex-dividend, these August options are definitely an exercise for the dividend to turn those short, to turn the long side, to turn those long call options into long stock, receive that dividend. The short overwriter certainly doesn't want to have his stock called away. He wants the dividend. Rolls them out to August, same exact strike. That is unusual. He did pick up 63 cents. So he is, again, lowering his cost basis by collecting that premium of whatever his stock purchase price was. And he collects his 63 cents and, more importantly, does not have his stock called away the day before the stock goes ex-dividend.
Mark, this kind of refers to something we were talking about on the last episode, which is, the risk. I think it was a listener question we had about the risks of, Steve, you're on that episode as well, about writing calls in high dividend yield stocks. And this is one example of that. Sometimes your time frame could get a little bit shuffled around. If you forget about when the dividend dates are, you may find yourself with a perhaps unwelcome surprise, or perhaps welcome. You never know. Sometimes how these things work out, but it is a surprise nonetheless, something you don't really want in your portfolio. So you concur, and were you also kind of head-scratching, Mark, at why this guy would continue to have at the 40 strike instead of maybe perhaps choosing a little bit farther up the strike curve?
Yeah, I was a little surprised by that, but my guess is this is somebody that got a little caught up on a trade. They thought they were smarter than they were, and they need to cover and not lose the stock to the dividend. So that's my best guess. this trade actually might have originally been part of a call spread, because I did notice that there was a call spread that went up back in kind of early, late June, when the market was rallying off of, the market got its first kind of rally off of Brexit. Some guy must have thought, oh, this Brexit thing's going to make sure MetLife can't rally. So he sold a bunch of 40 calls. Well, lo and behold, not only can MetLife rally, it can keep going, and so can the market. So I think this was an unfortunate, just an unfortunately timed sale.
Yeah, an interesting selection. This one I think we'll probably mark in our to be watched category, as well as we move on to our next name, our next victim. I don't know. We still haven't decided if it's a good thing or a bad thing to be featured at this segment. Maybe a little bit of both. You never know if you want savvy paper floating around, or maybe sometimes highlighting some weird. A lot of times they're highlighting weird, corporate actions that are going on that maybe people don't want having. Either way, let's keep on rolling to our next name. This is one we haven't checked in on a while either. This is First Data Corp, ticker symbol FDC, closing today right about 13 even, up about 62 cents or about 5% on the day. So not a bad day for good old FDC. Of course, they did have earnings before the bell. That tends to happen, and that tends to help on movements like this on days like today. It's the name that does just a little over, a tick over about 1,000, nearly 1,100 contracts a day. So not a gangbusters volume, but today doing nearly 10,000 contracts, about 5-to-1 calls over puts. That should again give you some inkling of what we saw out here today. And this time the size came a little bit farther out into October. It was the OC 13 calls that we saw paper lining up just to go forth and blast away at, selling one block of about 4,000 for 90 cents. More size followed therein for a total looks like about 6,600 or so, right around there on the strike total. So clearly this was the lion's share of the paper out here in FDC. All this on open interest of just 650 odd contracts. So interesting that we would see this going up post earnings, and also someone who perhaps believes this bounce is a bit short-lived and willing to aggressively ride a strike that is now in the money, if ever so slightly, and doesn't think this thing is going to be continuing the rally, perhaps taking advantage of this near-term pop to get themselves a little bit extra yield. Maybe they do have some long stock position, or maybe they are just looking to carve out a little bit of extra juice on this name. Looking back at FDC over the past year, this name has had quite a range. Again, back in the height of the tumult back in mid-February or so, this one hit its nadir right around 9.5. Since then, it's kind of been on a bit of an odyssey, rallying all the way as high to about the 14 handle, or very close back around earnings in April, and has flirted with those levels ever since, but kind of been vacillating on the 13 handle for the better part of the last couple of months, getting back down actually as recently as late June back to 10. So it's had quite a voyage this name has been on. So all that amounts to saying this is a fairly aggressive right, because we have seen this name pop through. In fact, towards the end of last year, it was trading $18. So it has been within the last year well north of that 13 handle. Mark, we'll start with you. What caught your eye here? I think this is someone just taking advantage of this vacillation, a little bit of vol here on the upside to blast away on this 13 strike. You think this is a speculator, maybe someone who's got long some stock? What are your antennae telling you on this one?
Yeah, that was my thought. This had a nice pop on earnings, and then someone said, "Boy, this is a nice pop on earnings. I'm going to sell some Primo." So they, they're getting a nice 7% premium on their stock. I don't know if it's 1-to-1, but I guarantee you they've got some sort of short position against the totality of it.
Oh, not the worst idea for covered calls. I mean, if you think the market's, at near all-time highs, you think, this stock has had a nice comeback from lower levels within the year. Obviously, it has been higher, but there's nothing wrong with selling at-the-money call options as a covered call, especially extending out the expiration to October. He didn't have to suffer through, these options didn't suffer through the vol crush that the front month options certainly did. And so he still got, a dollar premium, 7% of the underlying. So that's, more of a defensive covered call, right? 7% downside protection. But 7% between now and October, lo and behold, it's August, right? So August, September, October, 2.5 months, that's a pretty nice annual yield if, in fact, the stock is called away.
We were talking about this on one of our earlier episodes, on some other programs on the network as well. Kind of in this environment where we are, of course, sub 13 handle out in VIX, and a lot of names are at relatively low levels of implied volatility, even given the fact that we are in the middle here of earnings season. Kind of how do people have to mitigate and adjust some of their traditional call writing strategies to try to make them a little bit sexier. And one of the ways to do that, is to get that a little bit closer to the at the money, sometimes even playing a little bit of fire going in the money to get that extra bit of juice on those names. And perhaps our friend here taking advantage of that as well as we move on into flipping the script entirely here for our final name. No more call overriders, no more rolls. Instead, we're going way out there in Trina Solar Limited. This is an ADR, listeners, in case the name didn't clue you in on that. Closing today, $10.33, lighting it up today, up $2.08, or about 25%. So not a bad day for Trina Solar. Of course, a lot of action out there in the solar realm today with the Tesla deal finally being, and Solar City finally getting approval there, or getting finalized there. So solar is pretty much on the tip of everyone's tongues today. This is the name, like I said, closed at $10.33. Average is actually fairly decent volume for a pretty cheap name. Nearly 5,000 contracts a day. Today, doing a whopping 54,000. So lighting it up, pretty much 1-to-1 calls over puts. No real big size discrepancy there, which is kind of interesting in and of itself. Usually on a day like today, underlyings move 25% in any one direction. You'd see usually a preponderance of calls lighting it up, yet that's not really the case, probably because the biggest trade of the day came on the put side of the fence, and in particular, this one was way the heck out there. This wasn't in August or October or even Jan of 2017. This was all the way out in Jan of 2018. A bit of a funky strike selection as well. It was the Jan 2018 5 puts. These are puts that weren't particularly relevant this morning, and as of the close today are even far less relevant. A customer coming in and just gobbling these up through sweeps to the tune of we're paying about 20 cents, starting it off about 14,400 of these as the day went on. Looks like nearly 19,000 total going up on the day. So that is a ton of size, a ton of activity, however you want to put it here, on a very, very far off, very, very not yet catastrophe, but borderline for a name like this. The stock has to be cut pretty much 50% now for these puts to even be remotely relevant. Open interest on this strike, pretty nominal as you might expect. Still about 4,000 contracts for all the way out in Jan 2018 is kind of interesting. Obviously, this is a cheap ADR, so strike selection a bit of a problem out here as well. They didn't have a 6 or a 5.5 or any other strikes to choose from. Pretty much 5, 7, 10, and 4 are their choices. So maybe splitting the difference there and choosing the lesser of two evils. Looking back at the year that was here in TSL, like I said, as of this morning, it was trading in the 8 handle. So this thing's been all over the place over the past year, getting as high as flirting with right around 11 a few times over the past year, and just like touching it briefly before and going through it a little bit back in December before kind of giving up the ghost. And now we're kind of back in that range. Kind of interesting no matter how you slice it. Mark, take us home on this one. What's your take here on the size, on the month selection, on the strike selection, all of the above? Kind of a bit of a weird one.
This is one of those Chinese take unders where they're buying, they're taking the stock back private, and we've seen some of these fall apart. And this appears to be a big bet or some sort of merger arb bet on either the deal falling apart or someone who is planning on the deal not falling apart, making sure they don't lose their shirt in that process. But it's very suspicious paper and points toward some potentially real problems with some of these Chinese deals. Some of these Chinese deals have not been great, and some have been broken up. So that could be the problem.
I think when someone's buying the 5-handle puts, I think the fact that they're worried that it might not be great is probably the understatement of the year here. They're worried that this thing's going to fall apart and fall apart hard to the tune of, like I said, getting cut pretty much in half over the course of the next year and a half or so. So this one, we'll file it maybe in the much longer term to be watched category, because these ones going to take a while for those guys to bake in the oven. But these are pretty much catastrophe puts here, or close to it here in the TSL. So we'll keep an eye on these, see how things roll. Speaking of rolling, let's keep on rolling with the program. It's Monday. It means it's time for Uncle Mike to come on down from the mountain, stone tablets and smoking jacket and bubble pipe in hand to dispense some options, wit, and or wisdom. It's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, that music means it's time for the strategy block. Like I said, the portion of the show where Uncle Mike takes the reins and I give my vocal cords a bit of the rest, which is always a welcome thing. Uncle Mike, I was checking in. Steve's a little bit off put because all these purple guys are running around the studio right now, but I was checking in with my minions as I do every week so they can give me some hint as to what it is you may be talking about. And after I bribed them with delicious jams and or jellies, they whispered in my ear something about margin. I couldn't make it out, though, because they're kind of hard to understand. Something about P margin. So I'm going to go out on a limb and say you're going to talk about the margins of someone's portfolio. Am I close?
You are. Yet again, your minions are correct. And I'll tell you what, when they got their secret reports that I was talking about portfolio margin, you thought they were crazy in the movie. You should have seen them. They were just going nuts when
those minions love jam, jelly, and portfolio margin, the three things that drive them crazy.
Oh, you should have seen it. It was quite the sight. So, I mean, they can't even say it when they're backed by you. It's unbelievable. So, but today, folks, I want to go over portfolio margin and just some uses that I can bring up to you in that it's not necessarily the traditional way of using it, but I shouldn't say that. There's just other ways with which you have a really nice tool there if you need it for certain things. The first thing that I want to emphasize is if you're going to use portfolio margin, the worst thing that you can possibly do is over leverage yourself. If you put 150 grand into a portfolio margin account or whatever the broker requires for the minimum, and all of a sudden you're just buying $1 million worth of stock and you're using it just for that purpose to roll the dice, and that's your whole net worth, and all of a sudden the stock goes down, well, you're going to be wiped out very quickly, most likely. So understand what you're getting into, understand the benefits, the drawbacks of portfolio margin before you do any of these things, and never over leverage yourself when using portfolio margin. It's the same thing with futures trading. If you're going to go long or short the S&P E-mini, and you have the absolute minimum in your account for that, and you're not putting on a stop loss, you're not planning any risk management if it goes against you, just plan on losing all your money. That's just hopefully I don't know how I can be more blunt about that. So with that being said, I want to go through some possible usage of portfolio margin. What portfolio margin is usually designed for with most brokers is that they're looking at the entire portfolio, meaning that if the portfolio, if you're invested in stocks, options, whatever the case may be, usually the threshold is a 15% movement against all the positions. So let's oversimplify it and say that you just have a whole account full of call options on the SPX. What it'll be formulated as is if it's a down move of approximately 15% in, not the SPX itself, but those options, that's how much margin you'll get a lot of the time. Now, each broker has different ratings in terms of what they'll allow you to do within a portfolio margin account. But with that being said, a lot of times, and if you just had straight calls, it would probably be a lot tighter than that. But my point is that they're looking usually for a 15% move in the underlying of what you have. I'm sorry, in exactly what you have. So let's say you bought $1 million worth of SPY, just the underlying. You could probably get 7 or 8 to 1 leverage on doing that if you were so inclined to do so. Now, why do I bring that up today? Well, we could go on for hours, all the uses for a portfolio margin account for options. But I want to go through some other things with which you could possibly do within a portfolio margin account for practical everyday use. Let's just say that you have $500,000 to $700,000 worth of just general stock holdings. You're buy and hold stocks, things that are not an IRA, just your general stocks. This is not your 401k money. This is not your IRA. This is just a basket of stocks with which you own, and you plan on owning them for a long time. Now, let's also say at the same time, you're a small business. We had a client speak with us about this, actually. And maybe you want to have a business line of credit at a bank. Well, depending on what the bank charges you, sometimes it might be 5 to 7%. Depends on just what kind of a deal that you have through your bank. Another alternative to a business line of credit, let's say you need $50,000 to buy some inventory for your business, whatever the case may be. Well, if you just have those stocks sitting there, you can take $50,000 out and use it as kind of a financing mechanism. I think that's a phenomenal tool that you can do, and you can do that in a general margin account as well if it's a small enough amount. But with portfolio margin, you have a lot of flexibility with what you can do in that type of thing. I know I have a lot of clients that are small business owners, and that's a tool that can be very beneficial to them if they're not getting enough credit at the bank, or it's just not a good interest rate. Depending on your broker, it might be something with which to consider. Now, another use of portfolio margin, you could use it for a type of leverage. For example, let's say that you just like Apple that much, and you want to buy some extra Apple, more that you've already maxed out your 401k for your retirement, you've already maxed out all your IRAs, and then right now you're just at the stage of buying non-qualified stocks as an investment. By non-qualified, meaning it's not within an IRA or a 401k. Well, by doing that, you could buy a little bit extra Apple or Google or whatever stock you would like to use and pay the actual interest on there and treat it kind of like a home mortgage. In 30 years, everything will be paid down from what you're putting into it. But if you're paying such a small interest rate and you're okay to weather the storm and you're prepared to take on a margin call if needed, if it does go against you, then that's another use with which you could use portfolio margin. And a lot of times brokers don't have a very high interest rate with which they charge on there. Yes, it's typically more of a short-term interest rate that's being used with portfolio margin, so don't plan on locking in for 30 years like you would with a mortgage by any means, but it's something with which to consider. Now, the last thing that I'd want to mention with this is that this kind of relates to Option House a little bit as well, and what Mark was talking about at the beginning of the show. Let's say that you're concerned with interest rates going higher. Now, if you're basing your financial future on the current interest rates, well, you need to be prepared for interest rates to go higher. I don't see they're probably not going to go any lower, although you never know with this Fed. But in reality, they're probably going to go higher throughout time. So just to kind of add to something that Mark was talking about at the beginning of the show with Options House, futures. You can use futures or futures options as a way of hedging against interest rate risk if you are so inclined to do so and you're basing a strategy on that. So with that, I would just like to say that portfolio margin can be a great tool in investing with options. There are, like I said, we could talk for hours about all the different uses of portfolio margin for options. But in general, if you're trying to do some other things that you can combine with your overall long-term retirement portfolio margin can be a tool depending on what you're looking to do. And that is the strategy block for today. Hopefully I calmed down the minions in the studio.
We've plied them with a little bit more jam and jelly, and they're nice and subdued. They're kind of crawling all over Steve right now. He's a little bit freaked out, but if he doesn't move too much, I don't think they'll bother him too much for the rest of the program. Well done, Uncle Mike. As always, you can always hear Uncle Mike and his bit of strategery every Monday here on the program, streaming live 3 p.m. Central, and of course, download it after the fact via all the big platforms on Tuesday morning. You can listen to all that goodness there as well. Meanwhile, it's time for us to keep on rolling. We got a little bit of extra time, so might as well get see if we get a little bit of you guys on the show with a little quick segue into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Of course, the portion of the show where you guys get to fire off your questions, your comments, all sorts of fun things. I can get into all the ways you can do it, but instead, let's get into some of the questions. Actually, we have a fun one here. We put out our question of the week about an hour or so before showtime, so still pretty early, still pretty nascent in the voting. You guys have all week to make your thoughts heard on this one. Of course, follow us at Options to do just that, or if you'll see links via all of our other platforms, Facebook, Stock, Twits, etc. If you like to use one of those as well. Well, fortunately, you got to vote via Twitter. It is a Twitter poll after all. And with this week's question of the week, we thought let's get into some of the interesting things you guys, because we debate this a lot, but I want to hear from you guys. What is the most important to you guys when you're out there picking a different broker, and options broker? Obviously, we're talking options on this program. We're an options-centric network, so clearly options are our main purview. So we asked you guys, we gave you 4 choices: commissions, platform features, support/service, and finally, educational offerings. Steve, I'm going to turn this down so you can't cheat in studio and see the results so far. Again, all week to vote, so let us know. But here, what do you think Steve is winning well, first off, we'll do twofold. What is your answer? What do you think is most important, A? And then B, what do you think is winning our poll here with just only an hour to go so far, or an hour behind it so far?
I actually think we're going to get a wide divergence of answers with that. I mean, you would think the obvious question is commissions. You want to keep your commissions low, and that's obviously important. That's super important to Options House. We try to provide value to our self-directed active investors. However, low commissions without any platform is worthless. Low commissions without any service, kind of worthless, right? Education, low commissions and not knowing what you need to do, or not learning strategies, it's not worth that much. So really at Options House, we are really focused on the investor, the active investor, and the needs of the active investor. And personally, what I think is our biggest advantage is the speed of execution. And the speed of execution, I describe it as the time it takes to get the strategy in your mind into the marketplace and working. I mean, everybody has fantastic technology. The amount of technology that customers have is ridiculous compared to what I had when I was holding paper sheets down on the floor not that long ago. But now the technology is unbelievable. Our technology, our platform, other brokers' platforms, amazing how quickly they can route to the multitude of exchanges and get their trade done once the trade has been put into the platform. The real speed is how quick can I get that idea in my mind into the marketplace? How quickly can I find the information that I need, analyze the trade, and get it working? And that's where Options House, and that's where I specifically have driven Options House to really make strides, to really make that trade experience as quick and as efficient as possible.
I debated having them add execution in some way in there, but the problem is you're so limited in a Twitter poll like this. You can't get into the nuances of different types of execution, or and plus execution is so subjective. So at the end of the day, we only have 4 choices. We left that off, but that was one of the ones we were going to do, or maybe something along the lines of what you're talking about, maybe speed to execute or way that they execute. A lot of people have a couple of favorite strategies, and they kind of hinge their view of a platform around how fast or how easy it is to, let's say, I don't know, sell an iron condor or do a vertical, something like that. And if they don't make it easy for those couple of strategies, they're out and they're off to the next platform. So, so we were going to. There's a lot of ways you could carve up that apple. We only had 4 slots, so we kind of went with those 4 kind of top level things. But maybe in a future poll we'll get. Maybe there's a good poll in the future on execution. What's most important to you in execution? There's a lot of ways you can carve up that pie, I think, out there. I don't know, Uncle Mike. What are your thoughts here? What do you think is winning, and what is your personal choice?
I think platform is going to be number 1, and I would say commissions will be number 2. But in my opinion, what's most important to me is the service. Just because I've had some bad experiences with brokers in my life, and I've had some really good experiences with brokers in my life. And platform's important to me. Don't get me wrong. I think it's very good. But when the platform goes down, and every platform will go down, or there'll always be some type of problem somewhere, no matter what. So long as humans build the platform, it's never going to be perfect. So what I personally need is someone to where if I need to get something filled, if I need to get out of something, I need to call them up and I need them to say, okay, we got you. We got this. We'll do this, 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 and this for you. And I need to know that they're going to do everything that's humanly possible to help me in my moment of need. So for me personally, I need service. Platform's important, obviously. Commissions are important as well. And education's important too. But for me, I think service is the most important thing by far. Just because if you run into a broker with bad service, you're asking for trouble.
Interesting. You may be surprised then with or dismayed by our results. So, Sebastian, round us out. What do you think is winning, and what is your personal vote?
All right. Well, it's probably not education, and it's probably platform and commissions. I think worrying about commissions is overrated. Obviously, if you have a small account and a huge ticket charge, that's one thing. But as long as, I always teach people, get your commissions as low as possible and then don't worry about them because they're really unimportant. So I would actually put platform and as a part of that execution into that whole thought process, if that's the way people are viewing. And especially when it comes to an analytics side. So, for instance, I have a very difficult time trading without the platform that I used. And that's just the way it is. I need vol analytics in order to trade, so it really doesn't matter if my commissions are low and if I'm educated. If I can't figure out what I'm actually looking at and what I'm trading, kind of a waste of time. So I'm going to guess that in order, it's pretty close, but it's going to be platform and commissions, and then the other two are going to be way below that.
Yeah, unfortunately, I kind of feel everyone on the commission side. And, of course, obviously we like education and things here, too. But apparently our listeners, at least so far, a bunch of cheap bastards are responding early in the run here. Commissions running away with it. 65%. Again, only about an hour or so in, so we got a whole week to go. I'm sure that'll level out. And platform coming in a distant second, only about 24%. Education, 11%. And Uncle Mike, that's why I said you'll be dismayed. A whopping 0% so far here for support/service. So yeah, that's gonna even out a bit over the weekend. We'll see by Friday, maybe by Thursday's show, we'll have a better idea of how this is going to shape up. But an interesting, I think, probably contentious question of the week this week. If you guys want to make your votes heard, follow along over there at Options on Twitter. Easiest way to do just that. Meanwhile, it's time for us to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to our final segment, Around the Block. This is indeed the portion of the show we tell you what we're keeping an eye on for the week to come. And we had a big earnings week last week, but it still is earnings week this week. A lot of names firing off you may be interested in, including the aforementioned Tesla. It seems like a day doesn't go by without Tesla getting somewhere in the headlines or making themselves part of the conversation. Their PR team over there pretty good at what they do. Also Crocs, that big market mover of Crocs. We also have ICE, not ISE, the competitor there to CME. All that on Wednesday. Tuesday, we have EA, Electronic Arts, coming out. We mentioned Etsy and some of their weird, unusual activity in the odd block last week. They're coming out on Tuesday, as well as Fitbit, kind of an interesting one to watch and kind of see what the future holds for them. That whole wearables category, very, very competitive right now. Even though Fitbit, kind of like the TiVo, they kind of created that category in many ways. Thursday, more gaming, Activision Blizzard. We used to joke about them on the show a couple years ago. They were one of the more reliable premium rights in the business. These days, not so much. Moving around a little bit, a lot more expensive and a lot more volatile, which is both interesting and alarming at the same time if you're out there blasting away at premium around earnings time. Also, a few other names, H.H. Gregg, Starwood, and the old favorite Nokia. Still floating around out there in some way, shapes, or form, even though they're post their deal with Microsoft. Not a heck of a lot, really. Not a heck of a lot to look at as well. And Friday, wrapping it up, good old Virgin America. I don't know, Steve, we'll start with you again because you are in studio today. What's catching your eye for the week to come? Any particular earnings? Maybe some of the ones I named, maybe some of the ones I didn't name, or maybe are some of the OH clientele, you see them really flocking to certain names here this week, or what's on your horizon, your radar for the rest of the week here?
Yeah, it's good to be in the studio. You get to go first a lot.
That could be a dubious honor sometimes, too. You never know.
Yeah, last week we had some bigger, more well-followed names like Google and Amazon and those sort of things. But this week, I think it's real interesting. We're going to see the health of the consumer. We have a lot of consumer discretionary names. So on the earnings side, certainly that you'll see how our consumers spending money on. We have cruise ships, we have hotels, we have gaming companies. So we'll see what people or how the health of the consumer is, and how that's translating to these companies. But the thing I'm focused on first week of every month is unemployment on Friday. May was a disastrously low. June was a surprise to the upside, and I wouldn't be surprised at all if we see something that's somewhere in the middle. And for July now on Friday. So Friday morning, unemployment was always the biggest number of the month for floor traders, and so because of that upbringing, I still focus on that unemployment, especially with bonds starting to move around a little bit.
And we joked about it on the show in the past. It seems like, because you're right, whenever that number would roll around on the floor or the CBOE, pretty much wherever you traded, all things kind of ground to a halt. And then, of course, as years have gone by, certainly in recent years, non-farms and those numbers not as big of a market mover as perhaps they once were. And then, of course, that has changed a bit in the last couple of months, where we saw, like you said, some recent surprises that have changed our narrative and our perception of the macro, of the Fed, will they, won't they dance, and all the other things. So non-farms, you're right, and those numbers in general, maybe a little bit more on the radar than they were even a few months ago. So we'll pay attention to those. Let's start back in order of distance. Let's go to the Greasy Meatball. What are you watching for the rest of this week, sir?
Non-farms, and some earnings. I think after non-farms, we're setting up for what potentially could be like a historically low settle in August. I mean, I think for VIX, I think vol is getting set up to completely collapse. And again, I think if you look at Apple and you look at Facebook, I think those are two names that are potentially about to take off.
Yeah, Apple clearly taking off, and maybe from a vol perspective as well. And Facebook, of course, maybe having solved the mobile issue and now tackling a video. So maybe the sky's the limit for them as well. Take us home, Uncle Mike. What are you watching for the rest of this week, sir?
Well, just to add to what we had just heard, non-farm is the main thing. We're still trying to make another all-time high. We've been kind of right at the verge of it for a couple of weeks now, and just trying to see if we can break through. Would like to see us break through, so that way I can say my trademark saying again. Never has there ever been a better. I can't even say it. But anyway, we'll see if I can say it again in the next few weeks. But still have to get another closing high. Looks like we did kind of break through a little bit today, but we really need to get more of a breakthrough. So that is what I am watching.
All right, listeners, and that music means we have come to the close. We had another fun journey here on the old Option Block program. But before we go, one last time around the horn, see what everybody's cooking up that may interest you. Steve, you're in studio. You get to go again one more time. How fun is that? Again, you guys have had a bit of a crazy week over there, so maybe kind of hard for you to look too far into the future to see what's coming down the pike. But you guys obviously are working on some cool things. Let our listeners know what's coming down the pike in the near term over there in the land of Options House.
Yeah, I think a lot of our customers actually, quite frankly, are thinking about going on vacation for August. It's August, quick trip to the beach, something like that. I would caution them not to be complacent in this low volatility market. As our esteemed co-hosts have mentioned, the market's setting up that it could really make a move. Given that the volatility is so low and people have been selling premium into the ground, low premiums are the types of markets that occasionally, if they go through, can really add fuel to the fire.
All right, and Mr. Greasy Meatball, what's cooking in the land of Option Pen? I know you guys just came off the heels of your big professional trader summit. What else are you guys working on over there?
Well, we got this Wednesday, episode 4 of the Business Show coming out. Be ready, subscribe.
Be ready, be afraid, perhaps. Be very afraid.
Be ready, be afraid.
Of what that show may hold in store.
I listened to it. This one's a little longer, Mark, but it was pretty darn funny. I was cracking up. This is the one with my infamous line to the owner of General's Mills. Let's just put it that way.
I'm looking forward to it. Glad to see you crack yourself up, sir, too, which is always a good sign of quality humor. All right, and last but not least, Uncle Mike, what's cooking in the land of RCM Wealth Advisors?
Well, first off, if you have any other questions on portfolio margin or other ways with which I help clients invest, go buy my book, Go Long, on Amazon Kindle. It's for less than a price of a Starbucks. I'm still trying to come up with like a fancy 1/8 of a 10 lot type thing that Andrew does, but I'm not there yet. I'll come up with a good one. Also, if you are looking to invest and have a financial advisor, I will work with you. Most likely. If you just have a few $100 a month to invest, I am happy to work with lower net worth people. I scale myself because I have clients nationwide. I am able to do that and give you time and help you in the best possible way. Contact me at 312-212-3531 or at mtosaw@rcmfs.com.
All right, listeners, on behalf of Uncle Mike and Steve and the Greasy Meatball and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And, of course, for streaming live, hope you can join us every Monday, 3 p.m. Central, as well as Thursday, 3 p.m. Central, 4 p.m. Eastern. And we'll see you next time for more of The Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.